The S&P 500 daily chart showing the cloud and looking back to the beginning of the wave ABC. And I'll zoom in now and we'll take a quick look and won't spend too much time here. Everything that could go wrong did go wrong. You can see the demand lines were qualified and there was the price flip to the buy setup count 1, losing the sell setup count 7. And you can see the conversion line took a bend down, and so did the lower Stark band. And price ticked down lower than this disqualified momentum down, triggering a propulsion momentum up level for 50% and 100%. Only 50% is showing in this chart. So there's just too much going on here. I'm going to show quickly the PPO Extreme ROC 1 and ATR 2 chart, and then everybody gets to take a look at the big board. The ROC 1, ATR 2, and PPO Extreme chart shows the volatility regime is on. I knew that when ATR2 poked its nose above the positive 50 line the other day here, and the ROC 1 almost went above positive 1, that there was going to be some volatility, and now the ATR2 is barely above 50 at 50.21, but nonetheless above 50, and the ROC 1 went under the -1 volatility line at -1.38. So go ahead and read this up here. The S&P 500 support and resistance levels big board chart shows the gray areas at the pivot point, 21 EMA, 20 simple moving average, aggressive combo and sequential sell risk, and the weekly middle Stark band. And S&P price in the aftermarket hours on the 2nd at 5:29 p.m. Central Time is 45.18. So to the downside, 4504.74. If it ticks at that level or lower, then the D wave up 4 and down 1 will print, but the retrace level 61.8 Fibonacci retrace is at 43.12, and that will place the D wave up on D wave up 5 and down 3. Under there's the 4400 level, S1, bottom of gap zone 4, lower Stark band for the daily chart, daily channel 3, low daily horizontal support from 10/18/2021 in the bottom of the potential uptrend channel. And this ongoing demand line is support. However, if it opens lower than this level there and closes lower than that level end of day on the 3rd, then that will become qualified. If it opens higher than this level and then subsequently closes below it, then that will be disqualified. And if price decides to head upwards and gets past this level, 4539.68, and gets above there and closes above it, this will become a qualified cancel demand line. Same thing with this one. It keeps going, gets above that, closes above this level end of day, then this becomes a qualified cancel and they will disappear from the chart. So if there's a close below 4539.68, then both of these qualified demand lines will become qualified and confirmed. And that would argue for a test of these support levels in the 4490 zone, 4488, etc. And to the upside in the 4500 zone is this bottom of the pitchfork. If it has a hard time getting above that, then that will get in the way of canceling this demand line and this one too. So this is a critical level to watch, 4538.23. And the other levels to the upside in the 4500 zone is 4545.85. This daily horizontal support from 10/22/2021. The sequential sell risk level 4562. Keep going, and this uptrend line has been giving price a hard time, and it will be at 4572.32. And there was the price flip to the buy setup count 1. So the sell setup count 7 was lost, and that's quite painful. And I highlighted R1 as up resistance at 4540.96. And there was a tick lower than this daily 50% and 100% propulsion momentum down. Price ticked about 45.05, and that triggered a daily 50% and 100% disqualified propulsion momentum up at that level, and it could become qualified with a close above that level for end of day on the 3rd, and that will qualify the 50% and 100% propulsion exhaustion up levels. And what's in the way is the pivot point and the 20 and 21 moving averages over here in gray. So it would have to get above all three of those levels and this aggressive combo sequential sell risk level, which is formidable resistance, to go after this propulsion momentum up and get a close above that. And price in the aftermarket hours for the S&P 500 at 5:49 p.m. on the 2nd is still around 45.17. And this bottom of the potential uptrend channel is great support on its own, and it does have all these other levels here. This gap zone, this one over here, is noticeable, and that one could be a good buying opportunity over here. That's if it breaks all these other levels in red, so that should hold. And if it doesn't, before it gets to that gap zone 3, it has to go through the daily baseline S2 and trend factor down 1, which is pretty good support too. And the S&P 500 daily AD line and the NASDAQ 100 daily AD line, they're both above their 21 EMA signal line still. Not by much though. It's narrowing the gap for the S&P 500, and the NASDAQ 100 is pretty close now. And the volatility regime is on here with the ROC 1 closing at negative 1.38, and that's below the negative volatility line at negative 1.0. And ATR2 is above positive 50, so technically that's the volatility regime, and could argue for a pullback in the S&P 500 even more than what we have now, unless it can redeem itself tomorrow and get back up into the low volatility green zones. The PPO extreme bumped down quite significantly, so now it's in between the PPO level 4 and the PPO level 3. It needs to get back above 8.43. It closed at 7.62% above zero. So let's watch these levels tomorrow. 45.39 is going to be big. You can see the bottom of the pitchfork, 45.38.